You heard it here first. Bitcoin is going to zero. Zero. When it comes out, zero.
Just about everyone is bearish on the Bitcoin price right now, but I found something in the chart that says Bitcoin could be looking at some insane price targets in the very near future that, if hit, would smash the previous all-time high. Bitcoin has been going parabolic since breaking out in October, up over 300% to its all-time high at $42,000. Now, no doubt that these are some impressive gains, bro. But if you've been trading in this market for any significant amount of time, you are familiar with the holy grail of bullish chart patterns. And if you've traded this pattern once or twice, you're very familiar with how they like to end, and there isn't any reason that this parabolic rise will be any different. Now, this bull run is really just getting started, and there's going to be a lot of awesome trading opportunities. And some of these awesome trading opportunities are going to carry with them the potential to make life-changing money, and Bitcoin's coming breakout could be one of those opportunities. So make sure you stick around until the end of the episode, because Bitcoin is about to do something insane.
And booster ignition and liftoff of Space Shuttle Discovery, taking the space station to full power for full science.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everybody. Johnny here, and in today's episode, we are going to dive in this incredibly bullish case for Bitcoin. But if you guys could, and girls, please hit that like and subscribe, and don't forget to ding the bell to stay up to date on all of the latest and the greatest. All right, let's get right into this episode today. So I published this idea on Tradingview back on October 27th of this year. I saw something developing that I have trained my eye to just catch. This pattern can yield you some pretty impressive results in a short amount of time, but it is highly volatile, and if you don't know how to trade it, you can end up getting pretty darn wrecked. I called this back on October 27th. This is called a parabola. It's a fairly straightforward pattern. So basically, you get a stepwise increase in price, and with every move to the upside you get a nice volume spike until it finally runs out of steps. You hit a sell point, which is usually around base 4 or 5, and then you get a nice crash all the way back to the 61.8 retracement or somewhere around there. Now, this idea I published back on October 27th. I didn't see us going up past that 17.9 or 19.5. I didn't see us going up past this resistance at the time. Little did I I know, we would more than double that in just a few weeks, which was pretty awesome. Don't get me wrong, but I did take profits a little bit early, as I'm sure some of you did. But nonetheless, this really just drives home the point of what I'm trying to show you guys. So this is the basic structure of the pattern. Your base is up, again, in a stepwise fashion until you reach a point where the bulls lose control and there's just a ton of selling pressure driving the price all the way back down to the 61.8, and depending on the performance of the asset or what it does or how the fundamentals look, it could continue its uptrend from there, but this is just due to, you know, a crazy growth in price in such a short amount of time. You get this parabolic like structure. All right, so that's what we're really looking at with Bitcoin right now. So let's go ahead and take a look at the Bitcoin chart. This is the daily chart here. You can see I drew this parabola curve. We do see these volume spikes with every leg up in this parabolic move to the upside. And what we are really looking for right now is we are looking for that blow off top to come before price action breaks this parabola and gives us the correction that we've all been waiting for. Now, in yesterday's episode, I did go over a bearish idea. Yesterday, things weren't looking too good, and I really did think that Bitcoin was going to break the triangle pattern that it's in right now. I thought it was going to break that to the bearish side. Let's go ahead and pull up those targets. Okay, so this is what we were looking at in yesterday's episode. We were looking for a breakdown across this lower trend line, which did line up with the point of control, and it also lines up with the 21 daily EMA. We were looking for a breakdown from there, and then headed down to our first stop at $31,632, and then going down to $27,359. Now, as price action started to develop through the night, I definitely started to notice a bit of change in Bitcoin's price movement, and definitely, you know, the way the candle body structures are looking and all of that. So you can definitely tell something is coming into this market right now and really driving this price and keeping it from crashing down like it really did seem like it wanted to do over the past couple of days. So this is the previous idea. This idea really kind of molded into where I'm at right now. So it had me thinking, right? You know, this price action has really, I mean, it's been moving up quickly in a parabolic fashion, but we haven't gotten a blow off top per se yet. So typically when Bitcoin gets a quote blow off top, we see long wicks, a ton of volatility, huge spikes to the upside, followed by huge spikes to the downside, literally like 10-15% movements in like 3 or 5 10-minute candles. It can get pretty insane. I remember back in, we'll say April, March, no, we'll say more like April or May, into June also, you know, you could really, if you watch the price action as much as we do, you definitely notice when things change or when something comes into the market or when something is really driving where the price action is going. And we were getting these smaller parabolas on lower time frames. So they were pretty easy to spot. They came in waves, you know, we would see 2, 3, 4 in a row and then didn't see them for a while. And it turns out that they may have actually been fractals predicting this enormous parabola that we are in right now. I do not claim whatsoever to be an expert at Elliott wave theory, but I do understand concepts. I mean, I can spot patterns here and there. So we are looking at a horizontal triangle here. The horizontal triangle is a pattern that consists of 5 subwaves labeled as A, B, C, D, E. Unlike the motive wave, which also has 5 waves, this pattern reflects a balance of forces and travels in a sideways pattern. The subwaves are corrective and form patterns of 3s. Now, this is debatable or speculative or in the eye of the beholder, because these corrective patterns in Elliott wave theory are really vague and very ambiguous and really don't adhere to a specific set of rules. But the most important thing I want you guys to come away with here is one thing to remember about horizontal triangles is that they appear in the position prior to the final move of the pattern or as the pattern in a combination described below. We won't go into that. This means that they will appear as wave 4 in an impulse wave or as wave B in a zigzag. This is one fact that can help alert an analyst to a change in trend. Okay, we are at the top of this parabola, end of wave 4, looking to move into point wave 5 before we do finally get that extended correction that is kind of long overdue at this point. So as if we go back to if we reference this again, it said one thing to remember: the horizontal triangle always appear in the position prior to the final move of the pattern. So finally, I really think that this is the point in time where we will get our blow off top. As I mentioned earlier, so we talked about the horizontal triangle. I didn't really show it to you on the chart. I just showed you guys the example that I found online. But this is what we're looking at here. So taking a look at this triangle, let me just get rid of this text here. Taking a look at this triangle, so what we were looking at yesterday and in yesterday's video was a bit of a different triangle here. So we had our point A being down here with our B, our C, D, E, and then movement either to the upside or back to the downside there, but I actually drew the triangle wrong, so my mistake on that. But you know, as this price action kind of developed this morning, I really started to see this for what it possibly is. I can't really say it definitively is just yet, but so far so good. So we have our point A here, the beginning of this triangle, point B, and you can see the top trend line does line up with the all-time high, the peak right here, and then our point C. So we're looking for a move up to point D to give us our second touch on this top trend line. I mean, you could call it the third one, but the triangle starts here, and then from point D we are looking for another move back to the downside, followed by a sharp move to the upside in what effectively could be our blow off top here. So a couple of targets that we're looking for at least a move to the 0.5, which would be at 46,920. But in a blow off top, I'm fully expecting a 1-to-1 extension here. I mean, price isn't really going to close up here, but I'm looking at maybe a wick or two all the way up here to this 1-to-1 just above $71,900, which would be one hell of a move from where price is right now. Let's go ahead and actually take a measure of that. That's actually 108% move from where the Bitcoin price is right now. Absolutely incredible. So a couple of ways that you can trade this blow off top. So one thing we have to take mind of is something that happened back in 2017. So back in 2017, Bitcoin's most recent parabolic bull run, I guess you could count 2018, but it was kind of disappointing, to be honest. But here's 2017. We were coming up. We made new all-time highs. And then the following consolidation pattern, we saw this triangle. So this triangle looks very similar to the one that we are looking at right now, but it is a bit different. So what happened here is it looked like this is what was going on, but honestly, this looks very bearish, just like the triangle pattern that we are in right now. Price action does not look very stiff. It doesn't look very rigid. It doesn't look sharp. That's typically what you like to see in bullish price action, letting you know there's some volume behind that price movement. You can definitely see it in the way these candlesticks form. Anyways, but we got the bear trap here, followed by a massive move from $1,810 all the way up to damn near $20,000. So are we looking at the same thing right now? I think the answer is potentially yes. So we're looking at a very similar consolidation pattern here. I mean, things could change. I mean, nothing is set in stone, nothing is defined, but this is what makes most sense right now. There is a possibility of a bear trap happening again. So what I would look for here, and I'd be very careful. So trading this is going to be very difficult. I would not recommend it. The best thing you can do right now at this point in time is to just buy and hold, or look at getting into some altcoins, because we may get a nice altcoin boom while price continues to move sideways before it finally breaks this triangle. Anyways, back on track here, trading this. So if you're going to trade this blow off top breakout, what you're going to look for is some more confirmation that this pattern is indeed valid. So we got the bounce off of the lower trend line here, point C. Well, we haven't quite gotten it yet. It does look promising, but price is kind of just flopping around down there. We'll see if it gets a movement to the upside here, and we should know pretty soon what it's going to look like. Here's where we are. It's zoomed in view. This is the 1 hour chart. Again, you can see it a little bit more clearly here. We did come down. We wicked down to give us this point C. We are looking for a move up to D, back to E, and then finally a breakout of this triangle. So from where the Bitcoin price is right now, we are looking for anything between an 11 and a 9.5% move from where price action is right now, but we do have to remain careful. So the bearish possibility is very, very much still a possibility, and we definitely are keeping that in the back of our minds as we attempt to possibly enter a trade in here. So I mean, honestly, everything I'm going to share with you is my plan, but whether or not I enter into this trade will really kind of depend on what price action is looking like, how volatile it is looking, and if it really does look like this pattern is going to play out. So there's going to be a few factors. I'm looking for bullish or bearish divergences, really depending on which way I'm going to enter. So if I'm going to go short, I'm looking for bearish divergences. If I'm going to go long, I'm obviously looking for bullish divergences. They should start to accumulate on lower time frames, and then finally, when you do start seeing them on higher time frames, letting us know we are about to break out of this pattern. So we are at point C, looking for that 9 to 11% move up to point D, right around the $38,450 level, and then we should get a quick move back down to D before finally breaking this triangle pattern. But we can't forget about this. We do need to keep in mind that we might be looking at a bear trap here. So, and a bear trap could effectively give us a nice double bottom top here before Bitcoin kind of continues doing what it's been doing for the past few months, just going up and going up. So here is the 21 daily EMA. Price is maintaining support right there for now. It does look really weak, which has me a bit cautious about entering into any sort of long trade here, because at any point, if we do get a breakdown across this lower trend line, it would invalidate this pattern and this idea, and we would then flip immediately back to our bearish idea. So, you know, we're waiting for a few confirmations here before we even attempt to get into this trade. So we're looking for at least a movement up to point D, and then we will have our buy order set here right around $35,027 level, and then, you know, we would be able to keep our stop losses fairly tight just below the 21 daily EMA. At that point, it should be up around near $34,500 or higher, and that would give us a fairly decent risk to reward ratio. So if we did enter here on this, what's this price? On this $35,079 level, this isn't a place one buy order, put it all out there and hope it happens. This is finding a range of where price may go and scaling in buy orders appropriate to the probability price action moves within that range, if that makes sense. First trade here, obviously, you know, would be right here at this trend line. So that's a nice 7.18% move, which is a nice trade in itself after we make sure that a breakout is actually coming and we're not going to get a bear trap, or if we're going to make sure it could be a bull trap as well. We could get the exact same thing. We could get a fake out breakout to the upside, and that will be indicative of by extremely low volume. So make sure that you're only adding to your position or entering into your position if you're trading the breakout. If you see a large volume spike, a rule of thumb that I like to tell the students and the new guys and girls in the group is if you're looking for a real volume confirmed breakout, volume has to be at least beyond the volume moving average, and I have mine set to a 21 period look back. So, you know, if you get a volume spike above, you know, this moving average, that's going to give you a fairly confident answer if you've had or have not had a volume confirmation in your breakout. So our first trade there, you know, we have a decent risk reward 3.2. Our second would be up here trading the breakout. So you can trade this breakout a few different ways. You can trade it as it breaks out, because when price comes out of here, it could just launch to the upside and you might not get a retest, but the safest bet here would be to play the retest just in case this is a bull trap fake out before price heads further to the downside. So, you know, always be safe. risk management, capital preservation, and that is the most important part of any trader's trading plan. So our second trade here would be a nice 25% move with a 3.48 risk reward ratio. Again, you know, we will move our stop loss up as we move further into profit, making sure we are maintaining appropriate distance between our stop loss and price action so we don't get stopped out and miss out on a bunch of trade. We do not want to leave Bitcoin on the table. I hate when that happens. We all do it. Now, best case scenario here, we get in at this limit buy here right on this lower trend line. And then once price action gets up to this top trend line, by then, we should have some more confirmations, some divergences, possibly some volume moving to the upside, ton of different things, some bullish price structure here, letting us know that we should either take profit on this, take profit up here near this top trend line, or add to our position on the retest or breakout. So if price is just shooting out of there and we're getting a ton of volume coming through, well, you know, we entered in a trade here. It looks like we just have to be happy with a smaller margin trade to the upside. Either way, we're winning. In a bull market, if you're not losing, you are winning. Remember that. And then, so if we do come up and we do get that retest, we will look to place another buy order or a few on top of this top trend line, hopefully getting price to come down and fill those bad boys before heading back up to that 71,889 US dollar target, which would be a ridiculous risk reward at 12.9. sitting at about a 91.57% profit. This is the volume weighted MACD. Reliable signals, less false positives here with the volume weighted MACD, but for the most part, they're fairly similar. So you can see that we do have a pretty strong hidden bullish divergence on both of these MACDs as well. We did get a bearish cross attempt at a bullish cross here on the volume weighted MACD, but it is still on a pretty steep descent here on the daily chart. Okay, so taking a look at the RSI, nothing out of the ordinary here. We are headed to the downside. Again, to let you guys know, so during a bull run, especially during a parabolic rally, I've changed my settings around a little bit. I changed my look back to 8, and I changed my overbought and oversold levels. My overbought all the way up to 80, and my oversold all the way down here at 30, letting me know that, you know, an RSI in the range of 30 would be an excellent time to buy back in as this price is just climbing further and further to the upside. Looking at the daily stochastic here, you know, it's kind of struggling. It's kind of flopping around down here, and we've been seeing the same thing out of the price as well. Really, this is just inevitable. It's just technicals. We've been moving so high, so fast for a pretty long time. It was only a matter of time before the bulls ran out of steam and did need to kind of take a step back, get a breather, have a drink, maybe a Gatorade, I don't know. You know, they need to get their steam back. They need to get their strength back so they can continue this crazy parabolic 2021. Looking at the RSI, everything looks right here. We do have a bit of hidden bullish divergence here on the RSI as well. Same thing with the stochastic. And yeah, I mean, well, if the stochastic rolls over here, that will be a bearish divergence. And it looks like price action right now is sitting just on top of this 21 daily EMA. And if it breaks this 21 daily EMA, all bullish ideas are going out the window and we could be headed further to the downside. Okay, so let's go ahead and take a look at that bearish scenario. Let's go ahead and zoom into the 1 hour chart here. Basic bearish scenario. So how are we going to take targets? How are we going to re-enter this? So, I mean, basically, 21 EMA is going to be your guide on massive corrections like this, especially when you know that the market is bullish and the overall trend is going to remain to the upside. 21 weekly EMA will give you a very, very good entry point for a massive correction. So how are we going to find the bearish targets here? So I'm going to show you a really easy way to get your pullback targets, and it's a tool you can use in Tradingview. So if you go to Tradingview and take your anchored VWAP, this can give you an idea of where price action may be headed to. So we've had this incredible bull rally to the upside. What I'm going to do is I'm going to take an anchored VWAP here, and I'm going to place one at the end of every consolidation leg to the upside. So this is where we're at. So this is basically just, this is exactly what I said. It's an anchored VWAP, volume weighted average price. It's a very important indicator. If you don't know what it is, Google it, because I'm not going to go into it right now. But it's definitely something you probably should be incorporating into your trading. Not that that's financial advice, but it's very, very useful. So looking at this anchored VWAP here, we did get the bounce right off of this one, which does line up with this consolidation range right here, where the top of it is right at 24,210, letting us know that this may be a prime retracement spot if Bitcoin breaks this 21 daily EMA. Okay, so that's really how I use the anchored VWAP. It really helps, especially when you're trying to find the depth of these retracements. So the next one we took from the end of this consolidation move. Let's follow that to where price is right now. It's not holding support here. It is possibly breaking through, letting us know that if price does break down below this 21 daily EMA, there's a solid chance that it's going to fall below this consolidation range as well. So I hope that makes sense. So, you know, we could get the bear trap, so we're being careful. Looking at what we saw back in 2017, we saw if we take a Fibonacci retracement tool from the top of this move down to C, you see that the bear trap came all the way down almost to the 1414 extension to the downside. And if we kind of do the same thing here, so you can see our 1272 and 1414 are in the range of 27,750 all the way down to $26,546. So effectively, you know, if you were looking for a safe move in trading this price action, and sometimes getting a little lucky is better than being good any day of the week, as long as you're winning. Placing your buy orders in this range, hoping we get a bear trap to come down and fill those orders, may actually be a very solid strategy here, considering the amount of risk that may be involved with the volatility coming out of this consolidation range. So we are headed up towards the last leg in theory, and if we do head up towards that $71,851 level, expect some insane price volatility. But if we do break to the downside, you know, I'm not really sure how to go, or it might just slowly creep its way until the bulls start to take over again and start pushing price further to the upside. But either way, you know, if we do get a correction before a breakout to the upside, that's actually a very bullish sign long term. If we do get the breakout to the upside in a blow off top, that is actually going to be a very bearish sign in the medium to short term, letting us know that we are likely going to be dealing with a significant correction out of the price, likely coming all the way back down to this consolidation range where price is maintaining support from the VWAP right now, right around $27,864. But we do have the 21 weekly EMA all the way down around $20,000. And if you are like me, you always keep a trailing buy on the 21 weekly EMA during a bull market, because that bad boy will likely get filled. And if it doesn't at the end of the bull run, guess what? You got your Bitcoin. You didn't lose it trading. All right, guys. Well, that's it. That's all I have for you today. I hope you guys enjoyed today's video. I hope you got a lot out of it. Happy trading. Good luck, and good luck with this pattern. Do not forget to ding the bell and join the free trading group. Links in the description below. Peace.